Welcome back to The Contrarian, everyone. I'm Logan. I hope you're all doing well today. Today, there's kind of two big topics I want to touch on. They're kind of related. One is related to finance, the other is more related to geopolitics, US politics. The only reason why I'm kind of tying in US politics and Trump with all of this is about a year ago, I endorsed Trump for president. Of course, at that time, it was him on the Republican side, Kamala Harris, Joe Biden's VP on the Democrat side. And at the time, I thought that Trump would be kind of, an outside force, not kind of established candidate. It seemed like he had, faced a lot of pressure, at least in his first term, and it seemed like he might have the best opportunity at being an outsider in the office when it came to being a president in his second term. And I guess to put a long story short, especially in the last 3 weeks and the whole Epstein debacle, Trump effectively covering up for this pedophile blackmail ring, I have, completely, I don't want to say completely, but I would just say my mindset, my way of viewing Trump has shifted dramatically. I no longer view him as kind of this political outsider that he claimed to be. And if anything, I'm becoming more and more skeptical of his claims to begin with. Um, and, just a little bit of history with my own thinking on Donald Trump and everything. I was actually pretty skeptical on him to begin with. During his first term, I actually kind of warmed up to the idea of him being president. I just saw, a lot of the pushback that he was getting, especially from the mainstream media during his first term. And in my mind, that seemed to be kind of an indication that he was at least going somewhat in the right direction with things. And, definitely during Biden's term, I thought that getting somebody like Trump in there, not a continuation of Biden's presidency with Harris, I thought that that would be helpful, but it actually appears now that, if anything, Trump may be kind of accelerating the progression toward a technocratic kind of state. I know that's maybe a bit of a jump from where we are because it's only been, 6 months into his second term so far, but why I say that he's probably accelerating the jump into a technocratic state has to do with the fact that a lot of people who kind of during Biden's term were very skeptical, were very much so pushing back against kind of the authoritarian side of things, are kind of, they've let their guard down now. So, in Biden's first term, and even kind of the end of Trump's first term, you had, all the COVID lockdowns and the vaccine stuff. I'll just leave it at that. These very questionable vaccines and everything like that. And, at the time, especially with the vaccines, I was kind of, thinking that, oh, maybe Fauci is kind of fooling Trump. Maybe Trump will kind of become wiser to the plan that's going on, and he won't, keep doubling down on these vaccines. And if anything, in the first 6 months of this second term of his, it's been very disappointing to see him continue to double down on vaccines that have been very dangerous, very unhelpful, and now kind of starting to tie in with the whole economic side of things that I want to talk about today is, of course, I've been a big investor in the gold and silver space. Gold has done really well in the last 2-ish years, let's say, up about 100% in the last 2.5 years, especially in the last 6 months. And where this kind of ties in with, I would say, Trump kind of going off the rails, I would say, is it appears that, gold is very correlated with a loss of trust in governmental systems. So whether that be kind of, in the Eastern economies, globally speaking, where people in these economies have pretty much always saved excess savings in physical gold, physical silver, because for centuries, governments there have been less stable. People have had just less trust, generally speaking, in the governments there. And so they have just saved in physical stores of value, physical, like literal physical money is how I would describe it. Whereas in the West, it's kind of, I would say, last several decades at least, we've had the luxury of more dependable governments, rules of law that's beginning to kind of break down. But I would say, kind of just in the last year, or maybe even just the last 6 months, we're kind of beginning to see Western citizens, particularly perhaps in the United States, beginning to question the overall integrity of their own governments, and perhaps even beginning to see kind of a breakdown in the rule of law. And the rule of law is probably the best thing the United States has had going for it, because when it comes to economics, let's say I'm a global investor. I would invest in any economy around the world. First and foremost, I would look for a country that has a stable rule of law, because um, let's say I look at a country like China or India, or just any country in that area of the world. They have, historically speaking, not had very consistent rules of law. Just the overall business um, laws in these countries have been less predictable. I'll just say it that much. And the United States, at least, the last maybe 100 years or so, has been very consistent. It has very much so attracted global capital to come and invest in the United States, to buy treasuries as a reserve asset, hold dollars as a reserve asset. And the dollar has been the world's reserve currency for quite a while, and that's been a huge benefit to the United States. Now we have the Basel III, that went into effect about a month ago, where now gold is also classified as a tier one asset. So it's now dollars, US treasuries, and gold. So there's now three tier one assets. Used to be just two, dollars and US treasuries, but now there's also gold. Um, and that's a big change, because now, with a potential kind of double standard becoming more and more apparent in the United States, where if you're powerful enough, if you're wealthy enough, you can kind of pull strings, you can kind of almost do whatever you want. And if anything, I would say that Epstein, and just kind of broadly speaking, blackmail, influence by foreign countries, everything involving that happened in the last month. And that's, of course, tied in with Trump and everything like that I just previously talked about. And my personal, viewing Trump a lot differently, and his administration quite differently as well. That kind of goes to show, perhaps, there's a lot of people also in the US who are probably beginning to question things like that. And, with that kind of overall change of sentiment, change of perspective on the United States, um, perhaps a loss of trust in the United States, you could put it that way. With that kind of shift, suddenly people's perceptions of where they would like to park their capital can change a lot as well. And so, in my mind, it's kind of because of this big breakdown in trust, just in the United States government, in the validity of it, in the long term sustainability of it. It's kind of this erosion of the lack of trust in the United States government that, in my mind, has been a recent tailwind to gold prices, especially in US dollars, because, I mean, gold prices in other currencies have pretty much always been trending upwards. It's kind of only been in the last 2 years where the dollar has weakened substantially. Gold and silver, as a result, have rallied substantially. So, I mean, pivoting a little bit more now into what I want to talk about with regards to the gold and silver mining space. And this has been a space I've talked a decent amount in the past, and I've also been a big investor in gold and silver miners in the past. And I would say until like the last year and a half, these miners have, generally speaking, really underperformed. Until kind of the last year almost, you probably would have done better just holding the physical metals, or just an ETF of the metals for that matter. Um, However, in the last year, a lot of my mining positions, and even just a lot of the ETFs out there, GDX, GDXJ, SIL, SILJ, and ETFs like that. I mean, GDX so far this year in 2025, it's up some 53%, something like that. GDXJ is up about the same. The silver miners are up a little less than that, although I guess in my mind those probably have a lot more upside from here than the gold miners. But I guess one thing I wanted to talk about is just how even with how much these mining stocks have rallied in the last year, a lot of them are actually cheaper now on a PE, like price to earnings, or other metrics like that, than when I actually first bought them. And it's kind of crazy because I'll touch on a couple miners, but like Newmont and IM Gold, these are two individual gold mining stocks that I personally own. And I bought into them, I think Newmont actually under $30 a share, and IM Gold around $2.50 a share. And so Newmont's up about 120% from there. IM Gold's up about 200% from there, approximately. And in both of these cases, even though they're up so substantially from where I bought into them about a year and a half ago, they're actually both cheaper on a PE basis than when I got into them. So, if anything, you could kind of make a more bullish case for these miners right now than when I first got into them, even though they've already rallied so much, which is kind of crazy to think about. But I guess it goes to show, like, when you're dealing with a commodity producer, a gold miner in this case, let's say their break even price is $1,800 an ounce. And some of the miners do have a relatively high break even price to where if the price of gold is under $1,800 an ounce, let's say, they're actually losing money on mining operations. It would make more sense for them to just shutter the mine until prices break above that level, because unless you're actually able to sell it for more than that, you're going to be spending more money than you would receive by selling the gold. It's a pretty simple concept. So let's say gold now goes to $3,400 an ounce, approximately where it is now. So suddenly you have a massive increase in the profit margin of these companies. I mean, it's no different like with an oil driller or a stock like that. I mean, certain oil companies have the same dynamic where if the oil price is below a certain threshold, they literally are losing money producing oil. But if it's considerably above that, they are literally raking in a lot of money. So it's just an interesting thing to observe where the last couple earnings reports that have come out for stocks like this, where they've generally speaking dramatically beat earnings and raised expectations, suddenly your trailing and your forward PE multiples can be lowered dramatically from where they were before. So I think Newmont may have been unprofitable when I first got into them. Now they are profitable again and in a big way. So, or like IM Gold, I think it was a profitable, like they were making money at $2,000 an ounce gold, but now at $3,500 an ounce, they are really bringing in a lot of money. And I've just generally speaking been kind of surprised that more investors haven't been interested in the gold and silver precious metal space recently. If anything, that does make me more optimistic that we're still in the early innings of this bull market, because if we were close to the top, you would be seeing just your average investor, questioning, wanting to allocate more of their portfolios to gold and silver. You'd be seeing a lot more of that. And I just am not seeing hardly any of that, especially actually in the institutional side. So if anything, I see more interest coming from retail investors than I see from, your average certified professional financial advisor or, your hedge fund or things like that. So it's really interesting to kind of see that, if anything, retail may be more on the early side than the institutional investors. So, when I do start to see a lot more interest, just your average Wall Street guru or investor, financial advisor starting to talk about gold and silver, at that point I would start to think, okay, we're probably close to the top. But in my mind, we're probably not really close yet, as crazy as that sounds, because gold has rallied a lot more than I thought it initially would. I think it can actually go a lot more, even in just this kind of current cycle that we're in. So even this year, I would be surprised if it doesn't break above $4,000 an ounce this year, just in the last, 5 months of the year. That's crazy. And initially, I was thinking, okay, $3,000 an ounce gold is probably where it'll peak out at. But if anything, it's looking like probably north of $4,000 at this point. Silver has definitely lagged gold so far in terms of just total performance. It's actually not back at its all-time highs yet. But if anything, kind of as I've talked about in previous videos, like looking at previous cycles, it's kind of normal for silver to lag gold in the earlier stages and then really play catch up later. So if anything, I kind of see a lot more upside in silver at this point. And just for context, silver is a very tiny market in comparison to gold. It's approximately 1% of gold, and then, or I think it's 10% of gold, and then platinum is actually 10% of silver. So, like, platinum is 1% the size of the gold market. So, platinum's been kind of a metal that's come out of nowhere and really performed well this year. But if anything, that could really perhaps play catch up alongside with silver. And I do have a couple of small platinum positions of mine, but it's nothing huge. But that is also interesting to see that platinum is starting to play catch up as well. And kind of again, in previous cycles, platinum tends to participate as well, kind of in later stages. So that's kind of normal to see. But yeah, we will just really need to wait and see with, precious metals and everything like that. I thought it would kind of tie in well with my most recent thoughts on Trump and everything involving his second administration, because if anything, it looks like kind of the loss of trust in the dollar, loss of trust in U.S. common law and U.S. politics, that could really provide a big tailwind for gold in terms of being priced in U.S. dollars, as well as people kind of are generally speaking waking up and yeah, kind of like what I have experienced in the last month. It has taken, I would just say, some it's humbling. I'll just say that, because it's almost like I had previously analyzed the data in a certain way. I had thought, okay, Trump is probably the best, outsider we can get in terms of comparing Kamala Harris, Biden's VP, and Trump. I was like, okay, Trump's probably the better of the two. At this point, I'm like, personally speaking, I don't know if we'd really see any difference if Harris had won versus Trump now. Um, I honestly think it's kind of a big show, a big circus at this point. As depressing of a statement as that might be, it seems like we don't really have choices with regards to political candidates. Um, so that's just my updates, my 2 cents. I'd love to know what all of you think about all of what I've just mentioned. Drop any comments, comment section below, and I hope to see all